Welcome to the Daily Market Recap. Today is Tuesday, June 30th, 2026. We saw a fantastic relief rally to close out the final session of June. Wall Street pulled off a spectacular afternoon comeback, mostly because investors finally looked past the geopolitical headlines and remembered how much they love buying the tech dip. After a brutal 5-day losing streak where AI stocks felt valuation gravity, buyers poured back in for some massive quarter-end rebalancing. The SPY trimmed its monthly losses with a solid 0.8% gain, while the tech-heavy QQQ stole the show, rallying 1.5% as bulls reclaimed their throne. Looking at the sector map, it was a complete flip from last week's defensive huddle. Technology and consumer discretionary were the absolute rock stars, with major chip and mega-cap tech names spearheading the charge. On the flip side, the safe haven trade completely unwound, leaving materials and real estate out in the cold. It was a classic risk on rotation, proving that cash isn't leaving the ecosystem. It's just moving to higher growth neighborhoods. But even with today's beautiful green paint, don't think everyone is singing just yet. The Fear and Greed Index is sitting firmly at 31, which means the broader market sentiment is still shivering in fear territory. Investors remain cautious after a rocky month, keeping their eyes glued to the incoming economic data cascade. The most critical driver keeping the bears at bay right now is the major de-escalation in geopolitical noise. Despite a tense weekend of missile exchanges between the U.S. and Iran, Wall Street completely shrugged off the panic. Diplomatic teams are landing in Doha this week to negotiate an implementation framework for their recent memorandum of understanding. Better yet, marine shipping traffic is picking up, and global authorities officially downgraded the Strait of Hormuz threat level from severe to substantial for the first time since the crisis began. Crude oil prices stabilized, showing the market has fully priced in the noise and is looking forward. Story number 2. Today marked the final trading day of the second quarter, and institutional money managers were busy restructuring their books. This window dressing phenomenon created intense volume spikes as big funds scrambled to reallocate capital back into the year's best performing sector, AI and chip stocks. After an aggressive pullback earlier in June, these institutions used the final hours of the quarter to pick up premium tech companies at a relative discount, giving the market a powerful mechanical tailwind. Our third big story hits the economic data front. The Conference Board's latest survey revealed that U.S. consumer confidence improved by far less than economists predicted. A growing number of Americans are reporting that good jobs are becoming harder to find, despite separate reports hinting at steady hiring. This subtle crack in the labor narrative actually kept a lid on bond yields, because bad economic news can sometimes be good news for equities if it forces the central bank to keep interest rates in check. All eyes are now locked onto the upcoming payroll cluster to see if this trend holds. All right, let's see who absolutely crushed it today and who got completely wrecked by the volatility wheels. Time for our daily movers and shakers breakdown. Starting with our top gainers, Amba, FCell, Embly, VSAT, Ambarella led the chip charge with a gorgeous spike as edge AI demand roared back. Fuel Cell Energy caught a massive short squeeze bid alongside a broader clean energy bounce. Mobileye rode the coattails of autonomous vehicle optimism, snapping back beautifully after months of sideways chop, and Viasat rocketed higher after dropping solid defense contract updates, sending satellite tech bulls straight into orbit. Now for the painful side, today's top losers, CRCL, HTFL, Coco, MSTR, Cormedix, suffered an ugly sell-off as traders took profits on recent regulatory highs. Heartland Financial felt the burn of regional banking consolidation friction. The Vita Coco Company cracked open and spilled gains on worries of shifting consumer spending habits and supply chain inflation. And MicroStrategy got hammered mercilessly, plummeting hard after announcing a corporate financing structure overhaul that allows them to sell off equity to buy more Bitcoin. Shareholders clearly weren't amused by the extra dilution risk. Let's dive into the charts and map out the critical levels you need to watch. For the S&P 500, tracking the SPY ETF, today's rally secured a beautiful recovery high right around 744. Moving forward, your immediate line in the sand for support sits between 736 and 739. If the bulls can hold this ground, the next major overhead resistance target is looming large near the 750 psychological level. Over on the tech-heavy NASDAQ, via the QQQ ETF, the bulls put on a masterclass today after flirting with danger last week. The index reclaimed its short-term moving averages. Your primary support zone to watch is resting safely between 718 and 722. On the upside, the bears will likely mount their next heavy defense in the 730 to 735 resistance pocket, which needs to clear before challenging all-time highs.
Then there's the Russell 2000 small caps via the IWM ETF. Interestingly, small caps were the lone laggard today, failing to join the massive tech party due to lingering interest rate anxieties. For IWM, the floor at 296 is incredibly critical. If we break below that, it's a massive warning sign for market breadth. To prove this rally is sustainable, the bulls absolutely must push IWM back above the 300 resistance ceiling.
Shifting gears to the digital asset space, crypto gave back a chunk of its early week momentum. Bitcoin is currently fighting for footing right near the $59,500 level after a brief breakout attempt got swatted down by short-term sellers. Key support remains crucial, down at $58,000. Bulls must defend this line at all costs. On the flip side, we need a clean high-volume break past $61,000 resistance to spark a trend reversal. Ethereum isn't looking much cleaner, currently trading sideways around the $1,585 mark. ETH bulls are facing an uphill battle here. Immediate technical support is building around $1,500, which represents a heavy psychological floor. If the market triggers a relief bounce, look for stiff resistance to clog up the charts around $1,700. As for the broader altcoin market, it's a sea of mixed red, with Bitcoin and Ethereum losing steam overnight. Altcoins are experiencing a classic liquidity drain as capital consolidates into safer corners. Until the crypto majors establish a definitive bottom, expect high beta altcoins to remain highly volatile and sensitive to equity macro triggers. So what's the game plan for tomorrow? The general market sentiment is cautiously optimistic after today's tech save, but we are entering an absolute minefield of macro data. Keep your eyes glued to the screen for tomorrow morning's ADP employment report and the ISM manufacturing PMI. We also have Fed Chair Warsh speaking at the ECB Sintra Forum, which could send shockwaves through interest rate expectations right before the massive non-farm payrolls report hits the tape on Thursday. Rest up, protect your capital, and I'll see you right back here tomorrow.